OnMobile Global Limited Q4FY24 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pratik Jagtap from EY. Thank you, and over to you, Mr. Pratik.
Thank you, Manuja. Good day, and welcome to the Q4 FY24 earnings call of OnMobile Global Limited. Representing the management today, we have FC, Executive Chairman, MD and Global CEO, Radhika Venugopal, Global CFO. The call will start with brief update about the overall performance during the quarter, business activity and future plans by FC. Radhika will update on financials, and then we will open the floor for Q&A session. I would like to remind you that some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties that we see. For such lists and considerations, please refer to the earnings presentation. OnMobile Global undertakes no obligation to publicly revise any forward-looking statement to reflect future or likely events or circumstances. Having said that, I now hand over the call to Mr. FC. Over to you, sir.
Thank you for joining this morning. As an intro, I'd like to say that, as most of you know, last quarter I was not happy with the results, so I cannot say much more of these results with 2% and more. I still believe we can do much more than this. For me, steady growth is important. I don't like spikes up. I don't like spikes down. So steady growth is important. Gaming business is growing steady, 12% in the last quarter. The important thing to note is that we actually grew to 6.75 million net active subs, so a growth of 26%. The reason there's more subs than the average revenue growth, we're talking about 26% net active subs growth, is because the last portion of the quarter we acquired more subscribers than the first portion of the quarter. So obviously that will carry on quarter to quarter. Overall today, when we look at the gaming business, we signed up in the last 2 years 150 operators, more than 150 operators. We have live more than 100 operators. But the point I'd like to mention is that when we look at optimized account for marketing, we only have about 35 optimized accounts today out of 100 deployed accounts. Obviously, that's a challenge. We were planning to have way more accounts that would be optimized on the marketing front, so it is taking more time to optimize the account. When you look at the actual cost to marketing, we run this quarter at 74% marketing on revenue. Our goal was to be around 50%. We've said in the past that it takes us 2 quarters to optimize the account. So you could, when you get a new account, you're over 100% marketing on revenue the first quarter. Second quarter, you should be around 75, and third quarter on, you should aim towards the 50%. And after a couple of years, we should be below 50%. Now, I looked at every single account. Why are we not optimizing more accounts? Why is it costing too much money? And some accounts, it's not a deployment issue. It's really the metrics that are not okay yet. So, wasting marketing dollars has got no use for all of us. So clearly, we have to slow down on marketing in some accounts where the performance is just not there. You put the marketing, you don't get the revenues. It doesn't make any sense. For now. Now we know exactly what needs to be done to get to be able to optimize these accounts. So that's the work that the team has to do in the coming months. And as I'm saying, I don't want the team to rush and push too much money because we want to show a spike in revenue, because that's going to come with a big spike in costs, and it's not going to be a steady growth. So for me, it's important to do this smartly on every account. I believe also one thing we didn't do yet is the use of AI to optimize and analyze every single account and actually do, campaign management with AI. That's something I'd like us to be able to really nail, with the evolution of AI in the last 2 years, actually even last 12 months. There's a lot that can be done here. So that's one task the team has today. Last point I want to mention is that we've been focused in the last 2-3 years really on gaming. If you look at our traditional business, which accounts for most of the revenue still today, it's very flat. And my perspective on it is that there's no reason it should be flat. It is flat today. We have for every single legacy product line a nice evolution of where we see we can take the product and where we can really grow revenues. But the other thing also I'd like to mention is with the gaming strategy and marketing, basically what we've been doing for the last 2 years is signing up operator 150 plus. But what we did is actually, increase our cost of deployment because we had to deploy in every single operator the billing system and then start with marketing. So we increased both our deployment costs and marketing costs, and revenues is following along, right? So I don't want to change that strategy, but what I want to add to it is that there's no reason, having a very big foot in the door of all these operators that we don't carry on and actually elevate our whole product line in gaming, but also our legacy product line inside these operators, and have a way more strategic discussion whereby we could actually have revenues coming from the operators directly, not just from marketing, through Google to get carrier billing revenues. So, this was 20 years history of OnMobile getting revenues from the operator. In the last 2 years, we switched over and actually really pushed gaming direct to consumer using carrier billing. But there's no reason we cannot elevate this discussion. So that's really one end, a big push I want the team to do in the coming quarters, which might not have an impact directly in this year, but clearly would have a big impact in next year, 2026. So in a view, that's where we are this quarter, and we'll pass it to Radhika to review finance, and then we can go into Q&A. Radhika.
Yeah. Thank you, Steve. Welcome, and thank you everyone for joining us in this call. Let me share the key highlights of our finance performance for the fourth quarter and full year ended March 31st, 2020.
Ma'am, sorry to interrupt. Can you move the device near to you? The audio is not that clear.
Yeah. So is it clear now?
Yes, ma'am. Perfect. Thank you.
Yeah. In terms of FY24 performance, we reported a revenue of 523 crores, which is a decline of 4.7% on a full year basis. This is mainly due to Voda Idea revenue loss, which was offset by the growth in other geographies and increase in gaming revenues. Our gaming revenues, which constitute 50% of our total revenue, have grown by 9.5% on a YOY basis. Our gross profit margin stood at 53% on a full year basis. On the cost front, the manpower was down by 19% as we continue to drive efficiency and productivity across our business. Marketing costs grew by 14.9%, mainly due to our marketing investment in our gaming products. The reduction in people costs and OPEX have resulted in an improvement in EBITDA for the year, which stood at 28.3 crores, which is 2 times over the last year, which was 2x of last year. Our EBITDA margins is at 5.5% as compared to 2.4% last year. FY24 PAT, this year PAT increased by 126% over last year at 15.3 crores. We closed it at 15.3 crores with a margin of 3%. EPS is also up to 1.4 rupees versus 0.6 rupees in the last year. Now coming to our quarterly and sequential performance. We reported a revenue of 125 crores, which is a marginal improvement over the previous quarter, around 2.4%. And this is coming mainly from higher revenues in gaming. Gaming grew by 12.6% sequentially with a net active subscriber base of 6.75 million, which is a 26% growth over the previous quarter. Gross profit stood at 643 crores at an improvement of 8.8% over the previous quarter. And the gross margin also improved by 305 basis points to to 52.4% on a quarter-on-quarter basis. EBITDA for this quarter is at 3.4 crores, which is a significant increase over the previous quarter because previous quarter EBITDA was at 2 million rupees. This is mainly due to higher revenues in gaming products and cost optimization. Marketing as a percentage of revenue has come down this quarter to 74%. This quarter, we reported a net loss of 70 lakhs as compared to a loss of 2.4 crores in the previous quarter. And this quarter also includes an exceptional forex loss of 7.7 crores, mainly due to the currency devaluation in our entities in Nigeria and Egypt. If I exclude this forex loss, our PAT would be 7 crores. Overall, DSO is also improved at 94 days as compared to 105 days in the previous quarter. This is the best in the last 12 quarters. During the quarter, we incurred R&D expenses of 14 crores as we continue our foray into the gaming space. With this, I will now open the floor for Q&A session.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Ramasheshan from Pragya Consulting. Please go ahead.
Thank you for taking my question. I have a question to FC. Over the past 2 years, we've been speaking about at some stage the mobile gaming business becoming larger than the traditional business. And the numbers still haven't really come through. I know that there have been hits this year on the Vodafone customer, but even those should be fully recorded at this point in time. So just trying to understand with the base that we now have in FY 2024, which includes the Vodafone hit, going forward from here through 25-26, what is the kind of steady expectations we can see in growth both on the traditional business and the mobile gaming business? Just broad top line and percentage EBITDA is all we need, because the hassle that we are having as investors is that we are not able to get a clear sight of how long it's going to take for the hits to happen before the value comes through. So just some broad guidance would be useful, sir.
Yeah, you see when, and by the way, I share the exact same, impatience of it as this, because we put in a lot of investments in gaming, right? So our expectation was that it was going to grow faster. When we look at the plan, it does take more than 2 quarters to optimize, an account, which to me is surprising. I was aiming to actually get it down to a quarter, and now, with the past performance, we're dragging, right? I mean, some of the operators been there for 4 quarters, and I don't see the performance really increasing. In some other cases, we've seen them boom up, 10 times other accounts. So I know the formula works, right? It's just how to optimize it. I was surprised, when I looked at, deep dive on the number of operators deployed, over 100, to see that only 35 accounts were optimized. And when I say optimized, they're not optimized to maximum capacity. They're optimized to a point where it's a decent revenue coming in, and the marketing spend makes sense to continue spending. Meaning that there's over 65 accounts right now, which is the 2/3 of the accounts which we cannot market at capacity because it's clearly having issues, right? To me, that's a problem, right? You can't have a drag of 65% of your deployed operators that you cannot market because you have issues. So that's something the team has to fix pretty fast. Sometimes they're really basic items, right? We have too many click flows to activate a customer, or the pricing is too high and, it's not the right pricing in the market. Conversion for any reason to pay to a monthly plan doesn't work. So there's a lot of small items that can be optimized. Now, to your question and answer, I don't want to start what some of us have done in the past of really hyping up that next quarter is going to be awesome. Next quarter is going to be awesome. It's really not my style to give guidance on we're going to boom up. My aspirations and what I think we can do is still, when I say steady growth, you see, right? I mean, I want it to be, every single month growing. And I don't want to be, I'll come back to this, major operator we lost in India. Relationship with operators is really key, right? It's not just about marketing, and that's why I really want us to meet all operators that we have business with and really make this more strategic. I don't want to end up in the same situation for any kind of reason. We lose a contract in the millions of dollars and we're back, 2 quarters to 3 quarters down. I really believe on the opposite that we can actually, sign, $1, $2, $3 million contracts. By meeting more operators and getting this more strategic, right? So that would help the growth instead of, doing 2 steps forward and 1 step backward. That's, I know it doesn't clearly answer your question. I'd love to be able to share the financial model with all, but I'd like to keep it for now steady. All I can say is that, from my point of view, every single quarter, I want to see a growth. I don't want to see a spike up in 1 quarter and a spike down the next quarter. For me, it's not the way to manage, right? So that's what I want the investor to understand, that, for me, it's important to grow, step by step, but always in the forward direction.
So just 2 more quick thoughts. One, of course, thank you for speaking about the strategic side, which I think is more important than the operating side, because once you get the strategic side right, the operating side actually follows from there and not the other way. So that's one. Thank you for reinforcing that. The other piece is some key members of your management team left over the past 2 quarters. So any flavor you can give us in terms of what the plan is going forward on the management team?
Yeah. Let me start. I talked about Radhika joining instead of Ashish last call, but just to be clear, I mean, Radhika's been there since the IPO in 2008. She knows the company inside out. I have issues with management not being in the office. When I say that, I mean CXOs. Obviously, I'm not in the Bangalore office, but I am, as I said, in the Madrid office. But it was very difficult to have a CFO based out of Mumbai, flying in and out every 2 weeks. Now Radhika is full time on it. Very satisfied. I'm not. She's beside me right now, right? But I find Radhika very solid. She's on the ball on every single item. So for me, that's important. So I think we have a good CFO in Radhika. For the case of Sanjay, just a bit of history, guys. I've been. I'm CEO of Telesystem, my family holding also, right? We actually created OnMobile 24 years ago. I've been executive chair since 2014, right? When we did the offsite in 2019, December 2019, that's where we really decided to double up in gaming. We did the Aplan acquisition a year before that, and we doubled up in gaming and built the OnMo gaming service in 2020. I sat down with Raul, our employee number 1 on OnMo, and I built the whole team, built the whole specs, got the Rub Zero acquisition so we could actually build the moments and get this working. So I obviously know, honestly, the company inside out. Sanjay was on our board, right? Sanjay Bahuja was on our board, accepted to join as CFO when Ganesh left as CFO. That I'm going back a couple of years back, but just to remember, when we got into a COVID situation and we could not travel, and I had an issue in the, who was the CEO, I asked, Sanjay to step in because I could not even get in town. I could not travel, right? Nobody could travel. So Sanjay, based out of Delhi, accepted, to step in as a CEO. and during COVID, Sanjay, for a lot of personal reasons and the fact that he was based in Delhi, could not move to Bangalore either, and could not travel much either, right? So that puts a lot of constraint. When I talk about having relationship with carriers, it's very important, right? We need to meet them. So for many reasons and personal reasons, Sanjay had to step down, but transition-wise, there was no transition to do, right? I've been there for 10 years. Just in this trip here, right now we're in Dubai for the offsite because it was a central place, easy to fly from India, easy to fly international in one hub. I used the opportunity to meet with 4 operators. I went to Qatar, met the 2 operators in Qatar, met the 2 operators here in UAE. I see exactly what, we need to make this more strategic. And I feel that we can really elevate our game. So it's important for, the key management of the company to really get involved in a real business and strategic discussion with the operator, right? So that, Sanjay, so that explains a bit, Sanjay stepping down. And I also want to mention, obviously I'm not in the Bangalore office. I'm in Madrid. I will also have a new position, which is the President CEO, which will be based out of Bangalore, which as a first mandate will be to make sure that we, meet at least 80 of the 100 operators we have deployed today. And, we'll do a nice list out of 150 that we've signed and see, which one is really strategic for us this year. But we have to meet them in person, right? For me, a Zoom call is not... it's very tough to be strategic on a Zoom call, right? I think we got very used to it with COVID, and now it's like, I stay home and I do Zoom calls. But, it really, when we're talking about spending more time with our operators and getting what I call $1 million deals, and when I say this, it's not a 5-year $1 million, it's more like $1 million a year deal. If you want to get that kind of relationship and deal, you have to be in person. You have to take the flight and be in their office, right? You cannot do this on Zoom. So we have to restructure a bit our sales organization so that it's really aimed towards being strategic and taking the time to meet, our operators. And obviously being, based now out of Europe, it makes me, way easier to meet all operators in Europe also. And we have LATAM that we've invested a lot in the last year that we have to do. So, the globe is pretty big. We really need to, and that's why I did the changes on the top so that we can actually start really meeting the operators. So I hope that answer your question.
Yes. Thank you so much. I'm actually based out of Dubai, so at the end of this call, I'll mail Radhika and Prateek and see if it's possible we catch up here. Thank you, sir. Thank you for your time.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Bhavesh Patel from Patel Investments. Please go ahead.
Thank you for the opportunity, and it is great to hear that we are on the path of improving profitability. Is there a fair confidence you have in terms of FY25 and FY26 will definitely have kind of a net profit and increasing? And also, it's great to hear your sales focus, but do we have our delivery and platform capability in place to serve and scale without incremental issues?
So, I'll tell you a small story. I went to Qatar to meet Vodafone Qatar, and I realized the platform we have deployed there is doing millions of transactions. The uptime that we stated was 99.99999, and I said, guys, and the reality is the last few years there was 0 downtime.
Wow.
And our customers tell us that compared to any other providers they have, we are the most solid one. I look at the product line that we have, we have fantastic product. I look at the revenues coming from these product lines, it's awful. I'm like, guys, what's wrong here? Very strong product, but clearly there seems to be, that's why I keep talking about strategic, right? There seems to be an issue on how we negotiated our contracts in the last few years, right? I'll just talk about, Airtel. It's not, but we do 20 million subscribers, with our BT, in India. The contract is minuscule, right? How could we offer such, good and solid platforms with so low amount of money, right? Why we do this, right? So strategically, it's not just the product line that has to be strategic. I mean, the contract has to be strategic in terms of and material in terms of dollars, right? Not just we do everything for free or close to, right? Very low amount of money. So I'm very, to answer your question, I am very confident on our stability of our product line and the product line we have today. It's not a product issue here.
So on your question on net profit, you would have noted that this quarter, excluding the exceptional forex loss, we are at 7 crores of profit.
Okay. Thank you, Radhika. And in that case, as an investors and long-term partners, do we expect, revisiting our dividend sharing guidelines as well? Of course, at the right time and not immediately.
Boy, as you know, we almost have 48% of the shares, I own. I want a dividend more than all of you, trust me. So for me, it's important that we can start, cashing in. One thing, I like to be very transparent with all of us, right? And I want to highlight something also. I mean, we've invested a lot of money, as you know, on OnMobile in the past. So our cash went there. Future investment, it's key, profitability of all the gaming business is raising in 2025. One thing that will hit our P&L, and I just want to be transparent here, is that we have to amortize this investment now coming in the next year. So, on our depreciation will go up, but cash-wise, I mean, it's not a cash out. It's just that the cash has been already out, right? So that will impact, the actual below the line profitability, the actual cash that we can generate, and then back to your answer, can we start paying a dividend? 100% in my head, as soon as we start going back the profit, we bring back a healthy dividend.
Sure. And then it's great to know that you're meeting likes of global Vodafone Qatar, you mentioned, and that should help leverage revisiting Vodafone Idea as well, because they have raised funds and they are getting to a better shape than what they were last year. So will definitely help us.
Yeah, and you bring a very good point. Vodafone Idea raised a lot of money, right? So there's no reason we cannot sit back down with them and see how we can re-increase our revenues. And again, the same thing, but really make sure that we capture back at least our share. I think there's a lot of products we can help them with, right? So it's more a question of sitting down and negotiating again, right? So that's on the agenda.
Sure. Thank you, FC. Thank you, Radhika, and all the very best to all of us.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Anshul Saigal from Saigal Capital. Please go ahead.
Good morning. Thanks for the call. You mentioned that some, in your discussions with some of the operators, you came to the understanding that our products and our offerings are quite robust, but the monetization of these offerings is not as you would expect it to be. Could you give us some more detail on this? What kind of products and or some examples of what you are trying to say here, please?
Well, the first product, to be honest with you, is our gaming products, right? When we meet telcos today, they have like 5-6 gaming products. There's no link between each of them. There's issues on onboarding customers in each of them. And if we just say with the same pitch that any of them are there, we're just one of 5, right? I don't like to be one of five. I want to be on top of all the other gaming service, right? So that's the first strategic discussion where, a lot of them have a vision on, a larger gaming platform. A lot of them have RFPs. Just as an indication, we have not answered any RFPs in the last 2 years. Why not? I mean, I like to be driven with a strategy, but on the other side, we have to look at what the operators are asking, and you have to make sure your competitors don't, step in one step away to your business, right? Because then they're one step away to take everything. So that's, so the gaming side for me, obviously, remains a key aspect and can be more strategic. Tones, the Tones business, we keep saying, yes, Tones been there for 15 years. I met other customers during this visit, and, for them, Tones business is driving a lot. There's a lot of features on Tones that they want. We have a product that we've been investing a couple of years now, which is video Tones, which can only be done with 5G with no apps. We have a nice roadmap on Tones, but we don't seem to push it and really, and when I say push it, I mean push the revenues, right? So that's something that rapidly we still have like 35 accounts on Tones. We can grow these accounts on one end, and the other hand, we can upgrade them with video Tones, or we can upgrade the way we market the Tones business and make sure we get more, right? Services like infotainment, infotainment is a very large, there's a very large offering into it. There are very interesting platform on the, messaging side. I mean, we can do a lot on that front also, right? So all this to say, it's really not a product issue here. It's really a negotiating issue.
Right. Also, in your initial comments, you mentioned that we have so far been, we've been focusing on gaming over the last few years. And on the legacy business, we have been slightly underwhelmed in terms of how that business has performed. And that's largely because we haven't focused too much on that business. What exactly can we do to grow that business? The conventional understanding is that business as a whole is a declining business. So it's not something that we can do, it's just that the market is declining. Can you put some more light on that, please?
I really like the gaming business. I think we're at the right spot. I think it's a longer term business than we thought, right? Obviously, because we pushed it very hard. But again, I'm repeating myself, right? Trying to push a business has to come on both sides. And I think we were pushing too much on our strategy, not enough on our, relationship with operators to make sure they understand how strategic that was, right? So that we're not just compared as another gaming service. Having said that, let's assume we would not have spent any time on gaming in the last 3 years or 4 years. Well, there's no way we would have let this, traditional business decline that much, right? Although, we say, that we really took care of it. I'm looking at this with the team objectively, and I don't think we did. I don't think we did a good job on maintaining, the revenues that, every single line on the legacy went down, right? Over the last 4 years. Why? Why we let this go down? So that's why I want to bring it back. But instead of just bringing back legacy, I want to bring it back more strategically with gaming also, right? I really feel we have like 3-4 very solid product lines, including gaming, and that makes a very interesting discussion also at CXO level when you meet the operators. So yes, I feel that this business could have declined less, or at least be stable. If we then what we actually did as a performance in the last 4 years.
And then going forward, how do you look at this business? Are there going to be new lines that you're going to bring in here, or from the existing lines we can grow this business?
So going forward, we have to rebring this this B2B and customer management value in the company. We have a value of customer first, but we mean most often in the last 3-4 years in gaming, we were talking about the end customer, not that much the operator as a customer. I think we have to come back with that B2B mentality of really making sure that we serve the operators well, and that we do our job on explaining to them why it's so strategic and why they should pay us for it, right? As I was saying at the beginning of the call, I don't think, our operating plan for this year is done. It doesn't capture any of this. The revenues will be driven this year by, maintaining the legacy business while we grow the gaming business with marketing. Anyways, by the time we meet the operator, agree on a strategic deal, and they start paying us, it will have an impact next year, right, in 25, 26. In some cases, we might be able to get some, low-ball deals, low-hanging fruit deals that, we will positively impact, our core plan for the year. But, if I want to be realistic, I think that the big impact, of every effort on business development that we can do this year will be next year. So this year, the business is continue optimizing on the marketing front, 35 accounts going to 100, going to 150, right? So if we sign 150 accounts, we cannot spend deployment time, cost, and maintaining costs on 150 accounts and just be marketing in 35. For me, that's a huge waste of money, right? So let's steadily increase that 35 up to 100 eventually. And I agree. And just to be clear, there's always going to be issues in some accounts. Some accounts doesn't work, right? You can have a 15, 20% of accounts with issues, but I cannot live with 66% of the accounts, 65% of the accounts, not being optimized where I cannot put the marketing. Then it's a waste of effort, a waste of sales, and waste of deployment team, right? So that's really the plan for this year.
Right. And what that may mean also is that even though we are spending more than optimal dollars on these accounts, on these 66% accounts, they're not generating sufficient revenues. And so we may have to pull back on the marketing expenditure, which may in turn pull down revenues, whatever little revenues that we're getting from these 66% accounts. Do you think that, in doing this and focusing more on the more active accounts, we will be able to, first of all, make good the loss of revenues from these 66% accounts, and beyond that, be able to grow?
So just to clarify, the 65 or 65% of the accounts that were that are not optimized today, we're not putting marketing dollars today, or very low, right? We're testing, but it's not producing. I don't want to be, I've seen just on short charts, I've seen accounts where we market 200%, right? I was like, guys, stop this right now, right? There's no way we're going to waste that kind of money. So the money we have now on these accounts is very low, so it doesn't impact. So even if we stop today, you will not see it dip down. Actually, we did stop today, right? We're really focusing the money right now on these 35 accounts, which are optimized and can grow more. The point still remains, right? We still sign 150 accounts, and we will deploy all accounts that we sign, right? It's not what's useless to sign them. So I really need, and the team really needs to grow these 35 optimized accounts. Let's reverse the pie. Even if in the next year we go up to 100, 150 deployed accounts, we need to have at least 100 optimized accounts, which would make it 65% of the accounts optimized, 35% not optimized, right? It's still a big endeavor for the team to grow from 35 to 100. And the impact on cash is direct, right? You put too much marketing, the money comes out rapidly. And if the revenue is not there, then it really comes out. If we put a bit less marketing on revenue, but the revenue is really there, then we get the benefit of the revenue and we have less cost on marketing, thus less cost on direct cash flow, right? So it's very, very important that this job, it's one of the most important jobs we have to do this year, is to be able to really optimize the account. That's why I'm saying to the team, with all the AI out there, if we can have all the AI doing campaign management, finding the cohort, doing the campaigns, and really optimize, it's going to be worth, we can get an uplift of 25-30% on the performance minimum, right? And really make sure that we don't waste money on marketing. So That's why I'm putting a special angle on this. Does this answer your question?
Got it. So what you're in essence saying is that we're going to be putting in less dollars, but growth is likely to come given that we are optimizing our accounts, and growth will continue to come, if I get it right.
Yes. And what I don't want to start doing is managing quarters where we start the quarter in April, I'm putting full-blown marketing at 100, 120%, and I'm going all out beginning of the quarter to get the revenues. And at the end of the quarter, I stop all marketing, in end of May, June, so that, I get the maximum benefit of the revenues in the quarter. But now it's like driving a race car, right? Or a car, and I'm pressing gas and then brakes and then gas brake in a straight line, right? Nobody wants to drive like this, right? So it's a bit the same. So that's why if you look in this quarter, we have more subs at the end of the quarter in growth than the actual average revenue. Why? Because we've pushed the growth steadily, and we didn't manage it for the end of the quarter, right? I didn't manage it as the 31st of March. I manage it as we're entering the year, and steady growth, we keep on going, right? So if it makes sense to grow, we grow. If it doesn't make sense, we let go the gas on one account and we put more gas on another, right? But so that's a bit, when I say steady growth, but steady, that's what I want the team to be doing.
Right. In your doubt, will gaming be 50% of our overall, so 30% of overall revenues, maybe around 50% of legacy revenues? Is that a likelihood?
Right now we have... in the future, yes, I still have the same objective that we said, right? The only thing, though, is that if we start growing the legacy business, with more revenues, then, you're growing both balls. But that's a very nice problem to have, right? But on a steady state, if the legacy business doesn't grow and stay stable, it is still our objective in the future years to be 50-50.
And this would be, say, in the next 2 years, 3 years? This objective is for how many years?
I'm apprehending this one because obviously my objective is to do a good performance. But again, when I say steady performance, I think we can assume in the course of the next 2-3 years. Let's be reasonable. If we beat this, great. But I'd say that's a fair statement. By the way, I know we've said that, last year, that statement, and I know last year it was said that we'd grow way faster, also. The only gap in our, when I compare the year to what we had as a budget last year and what we have today after 12 months, the difference is on these 35 accounts versus 100 deployed, right? We pretty much deployed what we thought we would deploy. The problem we have is that only a third of them are actually paying off on marketing. That's the problem.
Right. My final question before I come back in the queue, you mentioned that your aim is to have steady growth month on month, quarter on quarter, rather than spikes and then declines. What that means is, and then like Radhika mentioned, that if there is no FX loss this quarter, then we would have a 7 crore profit. Essentially what that means is that on a sequential basis, we will see growth in revenues after the whole of Vodafone last quarter. And margins will start inching up every quarter henceforth. Fair assumption?
So, Anshul, sequentially, that is our endeavor to see steady growth in revenues quarter on quarter. You're right, 7 crores is a profit excluding exchange loss impact this quarter because NGN and EGP, both of these currencies devalued hugely. Going forward, yes, we will not be able to comment on exchange fluctuations because that's beyond the control of beyond anybody's control. Other than that, our endeavor is to grow quarter on quarter and have a steady growth.
As well as margin uptick, Radhika?
Sorry?
As well as, while we will have steady revenue growth, do we expect margin uptick also from here going forward, X of any forex fluctuation?
steady growth of revenues as well as margins is what we are, aiming for. Having said that, I would also like to reiterate what ST just mentioned a bit earlier, that we will have the impact of depreciating the investment what we did in gaming, which we capitalized, and that depreciation will start kicking in from Q1.
Yeah, that's all right. That's a non-cash expenditure, so that is understandable. Fine. Thank you very much. I'll come back in the queue.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Shailendra Agarwal from Agria Capital Advisors LLP. Please go ahead. Yes, Shailendra Agarwal.
Yeah, hi. Sorry. Just wanted to ask a question. The 7 crore exchange fluctuation that you talked about, where exactly is that captured in your accounts?
That is a part of forex loss. If you see the detailed financial statements, that is a part of forex loss. You will not find that in the investor deck because that's a summarized form of the P&L which is given there. You can find it in the detailed P&L which is attached.
Yeah, so so that's taken this quarter or it's taken previously? This quarter on right?
It was taken this quarter versus last quarter we had a gain. Current quarter we have a forex loss of 7.8 crores and that's taken this quarter. Yeah.
Yeah, so I am looking at your consolidated results that you released to the exchanges. But again, over there, I don't find it. The profit loss is minus 6.8.
Yeah, you see other expenses line?
Okay, it's being captured there. Understand. Okay.
Yes. So when there is a forex loss, it is clubbed with other expenses. And when there is a forex gain, it is clubbed with other income.
Understood. Second point that I wanted to make I can understand that now. Thank you. The second point that I wanted to make was, honestly, for me, the whole Vodafone India saga was kind of a bit surprising from the perspective of, so ideally, going forward, can we get some disclosures on kind of revenue concentration that you have from top 5, top 10 clients? I think it's a very standard feature of a lot of companies, but that's something that we don't get from you. So that will just help us kind of get a sense on, if a Vodafone India kind of situation was to happen again, what could be the kind of impact?
Yeah, so we have a non-disclosure agreement with the operator.
I'm not asking you to disclose the name I am not asking you to disclose the name of the operators. I am just asking you to tell me top 5 operators or your clients, how much revenue do they constitute? Or the top 10, how much revenue do they constitute out of your total revenue?
Yeah, sure. We will give you the data on that.
Sure. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I will now like to hand the conference over to the management for closing comments.
Thank you all for joining this call. Look forward to our next call, which will be in beginning of August. So with this Q1. So thank you very much for your ongoing support in the company, and then we'll talk to you this summer. Thank you.
Thank you. On behalf of OnMobile Global Limited, that concludes this conference. Thank you for joining us, and you will now disconnect your lines. Thank you.